Hello, everyone. Jeff Beckley with Beckley and Associates here. Now that we're at the conclusion of the current tax season, we're able to step back and really reflect on the three epic tax return fails we are seeing taxpayers make. So number one on our list, and it seems kind of obvious, but it's not reporting all income. The IRS gets a record of all of the income that you're generating via W-2s and 1099s. If you're not reporting all of that income, the IRS will send you a love letter telling you that you owe additional tax, and they'll probably tack on some additional penalties and interest. We've seen additional penalties and interest that can be as much as 25% or more of your actual tax liability. So failing to report all of your income can result in an audit. It can result in penalties, interest. Make sure you report all of your income. Now, related to that, in 2023, non-traditional payment networks such as Venmo and PayPal will have a lower threshold for reporting payments received by taxpayers through those non-traditional payment networks. So the threshold goes from a current level of $20,000 per year down to $600 per year. And that means that you may receive, if you received from any single payment network $600 or more in payments, that will be reported to the IRS as income. And then you will be responsible for making sure that that income gets covered or reported on your tax return starting in 2023. So it's very important. Make sure that you report all of your income. It can lead to sleepless nights when you get an IRS notice on that. So number two, epic fail that we see is paying your income taxes late. Now, a lot of people are under the impression that if I file an extension by April 15th, I can postpone my payment until October 15th. That's not true. What you need to do is pay your tax due, the estimated amount of tax that you have, that you will have liability for in the current year. You have to pay that by April 15th. You can still file an extension to buy yourself extra time to file your taxes, but the important thing is paying in 100% of your tax liability by the original due date. Now, that means if you don't know exactly what you're going to owe and you're not ready to file your tax return, maybe you've got some forms that you still haven't received from partnership K1s or whatever. If that's the case, you still want to make your best attempt at calculating how much you're going to owe, pay in more than what you expect to owe. You might get a refund, but at least you can avoid the failure to file penalty. You can avoid the late payment penalty, and you can avoid interest that's charged on paying late. Related area, of course, is going to be estimated quarterly payments. Some taxpayers are subject to quarterly estimated payments. And when you're required to make estimated payments, that means you need to make the quarterly payments in the amount that is required on the schedule that's required on a quarterly basis. If you don't make your payments on time and in the correct amounts, you may be subject to an estimated tax penalty. So again, pay your taxes on time, make sure you have good calculation of your estimated taxes, and pay your taxes by the due dates. Final area of epic tax fails is around the area of not taking advantage of all the tax savings opportunities available. And that would include the obvious, which would be deductions and credits that you might be eligible for. So for self-employed individuals, that could be home office, that could be mileage, that could be cell phone. For W-2 income earners, it could include charitable giving, could include medical expenses and making sure that you're optimizing your itemized deductions. It could include credits for things like electric vehicle or solar energy. Make sure you take advantage of all those deductions and credits that are available to you. But the biggest area that we see the epic tax fails occurring in is going to be in the area of retirement savings, whether it's through your employer retirement savings or a self-employed type retirement savings plan, such as a SEP or a solo 401k. We're seeing taxpayers that are not taking full advantage of all of the tax deductions that they have available to you, or optimizing the retirement savings options, making sure that the employer match is optimized, and then making sure that there's a good balance between Roth and traditional savings, qualified plans, or individual retirement accounts. So you want to make sure that you've got good optimized savings for retirement. You want to make sure that you've got a good complement in your Roth plan. Additionally, you want to make sure that you're taking full advantage of the IRA deduction that goes beyond your employer plan. A lot of people are under the mistaken impression that if I'm enrolled in a 401k plan, or I have my own solo 401k plan or SEP plan, I'm not eligible for IRA. That's not true. You can still contribute to an IRA, provided you meet certain requirements, as long as you have earned income that covers that retirement savings in an individual retirement account. You can also make possibly a deductible IRA contribution. Then finally, the area of Roth, very important tax savings, not just for today, but they can help save you taxes for tomorrow as well. By saving to a Roth plan, converting a Roth, um, and establishing a Roth, you can take advantage of, while you're not saving today against your taxes, you're not getting a deduction for taxes today, you can be saving in a way that is tax efficient growth, where it grows income tax free. And when you go to take the money out, it's not subject to required minimum distributions. You can choose the schedule it comes out on, and it won't be subject to income tax because you saved it in the Roth program. So we want to make sure that you're taking full advantage of those retirement savings accounts, particularly in the Roth side. But I know there's a lot of information here. I know we covered it very quickly. We're happy to help answer any questions that you have. Please feel free to give us a call or shoot us an email. We're here at Beckley CPAs, where we help you focus on what matters most. Thank you. Have a great day.